Talking about risk on today.
Is the safest place.
Emerging market stocks very much in focus.
Money fleeing out of oil.
The theme here is weak U.S. dollar. The market has gone one direction, straight up.
Lunch Money, weekdays noon Eastern.
Bob, what are you expecting from American Express today?
Well, I mean, we're looking for revenue growth around 8%, or very strong credit quality, spending growth, generally in line with revenue growth. So, a solid quarter, nothing gangbusters. We think they might beat consensus by a penny or two.
Yeah, that seems to be the norm these days, beating by a penny or two. Very few are blowing away. You mentioned revenue growth of 8%. I ran the numbers, 21% earnings growth last year, only 5% earnings growth this year. What has changed over the past 12 months at American Express?
Well, I mean, they'll grow 12% next year and the year after. It's a long-term 12% grower. Just last year, they essentially over-earned somewhat as credit losses have been improving pretty massively. They've been investing heavily the excess earnings, but last year they over-earned.
And delinquencies, by the way, should we be focused on the delinquencies line in the press release?
If you can find them, they're almost at zero, and they're the lowest delinquencies in history for American Express, 1.3%, and showing no signs of moving upwards.
Speaking of moving upwards, you look at the stock, and as we pointed out at the beginning of the segment, up 450% since the March low. So, Terrence Gabriel, explain the chart to us, although it's kind of self-explanatory, isn't it?
Yes, it is, Adam. American Express has been a leader in the financial sector. It's been exhibiting excellent relative strength throughout its long rise from its 2009 lows. However, when we look at it here a little bit more closely, the monthly indicators have not confirmed the recent price peak, and we're also seeing some waning upside momentum. Therefore, I think when you look at this stock and you see that it's approaching major resistance up in the 62 to 66 area, now that includes the 2007 high. I think the issue here is, has it factored in a lot of the potential good news, and given the waning momentum, I think the stock has limited upside and is likely to pull back.
Interesting, and of course the stock is up 24% year to date. That is about 3 times the S&P 500. All right, all that being said, Mr. Alex Brunell, give us the options trade from your vantage point.
Simple options trade here in American Express. Basically, I was looking at American Express movement over the last 4 quarters at earnings, and on average, it's only moved less than 1%. So right now, implied volatility is pricing in a almost 3% move. So I'm going to fade this movement. What I'm going to do is actually sell the 57.5 60 call spread for about $1.30. I'm going to keep this credit. I'm selling the 57.5 calls, and I'm buying the 60 calls for protection. Just in case the stock explodes, I'm capped out at a loss. If the stock stays flat or goes down, I'm actually going to have a profit.
Hey, interesting that you point out the options are a little pumped up on the vol. I noticed that it's trading right now at about a 25, 26 vol, at least in the front month. If you go out to, say, August, could you buy a cheaper put?
Perhaps, but I think just a simple trade for this earnings catalyst is appropriate right now.
Hey, Bob, as you look at American Express versus, say, Cap One, which, by the way, is also reporting this afternoon, what are your thoughts?
Well, I like American Express long-term. We're focusing long-term. They really benefit off of spending growth, and the secular growth of spending is the wave that American Express is riding, both U.S. And internationally. 85% of payments around the world are cash and checks. 20 years from now, that's going to be 50%. And American Express, along with Visa and MasterCard, are going to benefit from that over the next several decades.
All right, I hear somebody's...
Capital One, on the other hand...
Yeah, I hear somebody's BlackBerry